Have you ever felt it, that moment when excitement turns into unease? When everyone seems to be rushing toward the same shining future, and you can't help but wonder if it's all moving too fast? Right now, that future is called artificial intelligence, a promise so powerful it's reshaping industries, rewriting economies, and redefining what we believe is possible. But beneath the surface of all this progress, another story may be forming, one that feels eerily familiar. Because behind every boom, there's a whisper, a warning that not all growth is good growth. In October 2025, the Bank of England's Financial Policy Committee issued a message that cut through the noise. AI-focused tech stocks, they said, are dangerously overvalued. Their models showed signs that echo the late 1990 seconds, the fever of the dot-com bubble, when dreams of a digital future blinded investors to reality. And they're not alone. The International Monetary Fund is sounding the same alarm. Leaders warn that the excitement surrounding AI is driving stock prices far beyond what fundamentals can justify. The numbers are staggering. In the first quarter of 2025 alone, AI startups raised more than $70 billion, representing over half of all global venture capital deals. Money isn't trickling in, it's flooding in. And yet, many of these companies have no profits, no proven models, and no guarantees. It's a story built on faith and FOMO, the fear of missing out. Across markets, investors are pouring billions into anything labeled AI, often without understanding what's behind the name. It's not logic driving this rush, it's momentum. And history has taught us what happens when momentum becomes mania. Valuations are stretched beyond reason. A handful of giants, Nvidia, Microsoft, and others, now carry enormous weight on their shoulders. If even one of them stumbles, the tremor could ripple across the global economy. And then comes the risk few talk about: concentration. When too much power, money, and expectation gather around a single idea, it doesn't take much to shake the entire structure. So, what happens if the story turns? A sharp correction, a sudden loss of confidence. Markets that soared on speculation could fall on skepticism. The UK, the US, and Europe all are connected, and when one domino tips, others rarely stand untouched. And in the aftermath, as always, comes the reckoning. Tighter regulations, policy crackdowns, investigations, and disillusionment. The same voices that praise the rise will demand answers for the fall. But it doesn't have to end that way, because this right now is a moment to learn. Check the fundamentals. Look past the branding and buzzwords. Follow profit, adoption, and sustainability, not just promises. Diversify your portfolio. Question valuations that seem too good to be true. And remember, government policy can change overnight, especially when markets grow too hot. Most of all, don't let excitement replace understanding. We are standing on the edge of one of the greatest technological shifts in history. AI could heal, teach, create, and transform. But every revolution carries a shadow, and the greater the promise, the greater the potential for disappointment. So maybe the real question isn't if AI will change the world, it's whether we can change the way we respond to moments like this. Because if we can separate the promise from the hype, we might just build a future that's not another bubble waiting to burst, but a foundation strong enough to last. The future isn't written yet, but it's being coded line by line right now. If you found this story insightful, like, subscribe, share, and explore more of our enlightening videos on the world of business and finance, how technology shapes our world.